8:30 on tax day, the 18th. It's 8:33 in the morning. This is gold. I want to go over the pattern in uh, kind of minor detail. We had the range boxes, then the market contracted a little bit, and then the market came to this area. And I believe I did a video around that time. What happened is the market did correct higher, but it couldn't close the gap below that bar. So when a market does that, you expect it to go lower. And the areas where I would expect it to go lower are to the bottom of this middle range box. There are three big ones. We're not really looking so much at these. I should probably even take these off. I will after the video. And by the way, this was a reversal pattern as well. There was a 1.618. You're at the top of the range box. And there was a transition here that we talked about. And then the market started gapping lower. So you knew, at least in this period of time, when the market had a very narrow range to it, but it was changing. It was more of a trendy behavior. And then when it does this, you get an idea that maybe the seller, the high is here for the time being. And then when the market gaps below this area, you know the market's going lower. You just have to know where it's going, or where you think it's going. And it would be to the bottom of the range box, this upper range box here, or if it goes lower, it would go to here or to here where the market gapped, and that's what it did. And so on the way up, you would expect buyers at this level if you find buyers. And so what happened with this market, it did. This is a 4-hour chart. So it did start going higher. And then yesterday, when the market opened, it opened at this level. And it started going higher, but it could not close the gap. The gap is the gap below this bar. The gap goes below it. If the market can't close the gap and it starts finding sellers, the market's probably going to go lower. You can start doing A, B, C, D patterns, A, B, C, and it gets you down to the D. Now, what happened is it did go lower, but where did it go? It went to the support area of the middle range box here. And then that's here. And then it found buyers. So that was where the buyers came. And for now, the market's not going to here. It's trading to support. But if you're following the market and you're not spending too much time, because you're looking at 4-hour charts, so you can get an idea how to spend your time. When the market does this, you start finding buyers, you could buy it. And when that happens, the market goes up whatever number of points. And then if it can't close this gap and it starts reversing, you sell it. That's a 2-bar reversal. So you wait for one bar. This is the bar. It closes, the market opens, it tries to go higher. You can see the space between the pink and all these bars here. It doesn't close the gap. It starts going lower. I need to tell you, when, depending on how your computer screen and other things, you see that gap, the space. If you make things too broad, or you do things in a certain way, and you don't have a clear look at the screen, you don't see a failure of the market to um, you see the market basically trading to the gap. It's a distortion, and that's a distortion on your software, your computer. So it's the software being the thickness of the bars and the rest of it. So you will miss things, and you will miss detail like this, and it's a function of your computer or the graphics or whatever it is, the size of your screen, the way you adjust things on your screen. And that's important. For me, that would create an incredible inconvenience, because I'm looking at detail that I do not want to be obscured by the software and by the screen and the rest of it. So there's your failure, and the market comes down here. These are pretty big numbers. So, and also they're guiding you to the direction of the market. And even if you're short here and you think the market's going lower, if you start seeing reversals higher, you will know that there's a good chance that the market's going to eat into some of your profit. This will be an area where you may have a drawdown, assuming that you're in the market at a higher price. And you have to make those decisions. But the information is on the chart. If you have the right time frame, if you have the right tools, and you understand the dynamics of how markets work. And then uh, be, yesterday, when the market failed to go higher, it did go lower, and that's where the market found buyers. And you have a big buying tail here. Now, and also, I don't know what it is, but there's an extension. I'll put them all in so I don't have to guess. So this was the low. Let's do this. This is the low. The market corrects up to here. I hope you didn't hear that sneeze. So the market corrects up to here. And when the market goes below the low, it comes down to it goes lower than the 1.272, but it's pretty close to the 1.618. So and that happens if the range is not big. And on the price action, then the extensions are very close to one another. But you can see it's either 1.272 here or 1.618. It's not perfect, but that's the buying tail. It's basically a breakout failure. It's a breakout failure below this range box. It's getting back in. So if you are quick and you're able to find a trade like this. Now it's the 2 bar. This is a 2 bar reversal when it goes lower, and what you could do is do an extension of this. If you're just following the dynamics of the market that's trading lower, you might say, well, you know what? The market did this, and actually it did this. I want to get all the way down to the bottom here. It did this, and this was the last um, uh, low. This is a low, and then the market went lower. And so when it goes above this, the market gapped lower, goes higher. You could do an ABCD pattern, it would get you down here. But the point of it is you could do an extension of this bar that went higher, does this, and it goes lower. Once you see this, you know the market's going lower. So what would be the extension? You can do it in an area like this before, if you're watching, you can do it right away. This turned into a 2 bar reversal on this bar. So the market closed here, it went higher, then it started going lower. That's a 2 bar reversal. So where's the extension? Well, you can see it's a big move like this. You're not surprised because there's no support in here until the market gets to the bottom of the range box. And so, but you could also put in an extension. And this is if you're working every bar. Because I know it's about a measured move. That when I see this and this and a big move lower, I can see that this thing went down probably more than a measured move. I'm going to just make it a measured move. If it's a little bit off, I don't care. So that's the low. It only corrected to here, and then the market went lower. What it actually did, it did 2 of the measured moves. So we will modify it. I talked about this a couple times in the past day or so. And so it actually did two measured moves and then it reversed. So it just depends on the pivots that you pick. This is a pivot, this is another pivot, and when it goes lower, it went two measured moves lower. And that was perfect. And it was close enough to the 1.618. So I picked the nearest low, then it corrected, then you correct it lower. The market trades to these extensions. Any case, the market opens here. I'm assuming you would be long in this move on this trade when it's up here. And this is a two bar, I guess I'd call it a decision. The market closed here. And then the next day, after the session break, that's today, the market opens. It goes a little bit lower, not much lower. And then that bar starts going higher. It's telling you that these are buyers because the market went higher. And the market did a little do-jiggy here, but it's grinding higher. So you know when the market does that, if you're long, you should probably stay with the market. If you're short because you did all this stuff when it was down here, and you look at the market doing this and you're still short, you know you're going to lose more money. So when just have to read the market, and there are clues on how the market's moving. Now, where would this market go looking at the patterns that we look at here? Well, the market gapped here. So when these are the sellers gapping lower. It started up here, and really it started up here. But you see a line that hasn't been tested, and it gapped from here and went lower. So as the market goes up, I would look for this to be an impediment for the market to make new highs. We'll just have to evaluate it. So if I were long here, I might say to myself, you know what? This is where the market gapped lower. And we're getting pretty close. We have not closed the bearish gap lower. So, and the market's been gapping above this bar when it did this. So you have buyers gapping it higher and sellers that initially gapped lower. So you know that this may be an issue. So if you're a scalper and you got in this market somewhere at the bottom and you're scalping, and not today, it's 6 o'clock. It's probably 6 p.m. yesterday. The market opens. It opens after the session break. You have to know what that is, and you can look at your chart. And you are trading, and your stop here just has to be a small stop. Your problem here is getting in, being ready. The hardest thing is getting in. So you've got to know when this bar looks like a red bar, because it's down here, it's going to reverse and go higher. When I mean a red bar, when you put your candlesticks in, the market does this, and you have to know to buy on a buying tail. And so for the first 4 years here, I would say when the market comes to support, look for a buying tail. And so, but we made it a little different because it's easier to look for 2-bar reversals. And that's what I call them. They may be called something officially by someone else, but let's finish the thought here. So if you're a buyer here and you want to look at markets and basically trade to where the markets are battling between breakout buyers and breakout sellers coming from both directions. What are the buyers thinking? What are the sellers thinking? You know where the other side may be. So if the market is doing this, you may find that the market will come to this area or fail to come to it and start to go lower. So, because if it goes higher and it can't touch this pink line here and the market is reversing, this is a sign that the sellers have some level of control in this area because the buyers can't take it to the gap. And by the way, when you see this, the candlesticks, they obscure it for me. It's much easier when I'm doing this kind of analysis to put it on this kind of a chart, and that is why I use bar charts and not head and shoulder, not um, uh, candlesticks. But they're there. You just click a button on the top of your screen. You can use them both. You have more than one time frame you can use. You just click a button, you can go to a different time frame. So when the market, if we get in here somewhere, I would like to know, I would like to know, now you're not going to get into the very bottom, but you may get in at this level where that was when it gets into uh, the range box. So we'll make it a little bit on the you know, some room for a fudge factor. And the market, when it does this, it goes up about $2,000. So you may be able to take a trade like that and trade to 2,000. It may go to new all-time highs, but the fact is it's trading between selling gaps, and buying gaps. And so that's how you could trade if you want to scalp the market. And you don't have to be a scalper. So and if it's not just the gap, but which are important because they give you a lot of detail, and you don't have to draw a lot. You just have to learn to look for it. And your best bet is to look at it on a 4-hour chart and a daily chart, because the daily chart will be a little different. It's slightly different because you have fewer bars for the same period of time. So you have some variations, but they're not an obstacle. If I were trying to scale this thing or trade it last night, I'd do it on the 4-hour chart and I'd follow it like this. You could put an alert in. If the market opens like this, goes higher, you could put an alert in case the market goes lower. Why would I put an alert and not a stop? Well, I know what the market's doing here, and this is important, and it has a 2-bar reversal going higher. If it, you don't really know that how badly the sellers are doing if it goes lower. If you're in here, um, because it might just go a little bit lower, it triggers your if you had a stop, it would trigger your stop because the market looks like it might go lower here. It looks like it would be a 2-bar reversal, but it isn't. It goes higher. Now, this is not so important because you're making a decision to stay in here if you bought down here. So I don't want to kill this with too much detail, but um, if you teach yourself how to read gaps, the failure to test gaps, and just read it. You don't have to do a lot of drawing. You will and use a reasonable time frame like a 4-hour chart. You can read the market. And my big deal is when I was having my horrible times the first number of years, quite a large number of years, I was afraid of everything. At once I made a decision. If I didn't get stopped out, I was grateful. And then I didn't know what to do after I was in. Then the market would do some kind of a funny thing, and I don't know if that's a signal of anything significant. So my internal dialogue and my fear of having a loss or taking a loss got in the way. Then it was no longer organized thinking. It wasn't organized thinking, because if it was organized, I would be looking at the market for how I think the market's trading, and not my fear, because I have no idea what the heck the market's doing, because I didn't know how to read the market. Learn to read the market, and then if you're going to have psychological issues, at least do it with information that is more objective on the chart, not the information that's scattered in your brain that's freaking out. It's a different way of looking at the market and trading.